Will Bitcoin continue to rise? If you're interested in knowing more about this, please keep watching. Bybit is one of the best exchanges I've ever used. It provides great market depth, a smooth user experience, and an impeccable interface. Now, if you complete KYC and deposit $100, you will immediately receive a Bitcoin contract position worth $1,000. You can choose to go long or short. As soon as you meet the requirements, it will be opened for you instantly, without any waiting time. This is an unprecedented offer. Now, let's return to the current market situation. Actually, let's start by looking at the weekly chart. At this point, we can reassess the market conditions, because the most important thing we care about is where the current upward movement will lead us and in what form it will occur. This is the key factor for our future judgment. Once we have this assessment, we can devise our trading plan, such as whether to buy spots, or how to trade futures and so on. So, let's look at it. In fact, from the weekly chart, we can clearly see that this has also been noticed by many people, and has been discussed by many. This is a pattern of a head and shoulders bottom. The time it took for this head and shoulders pattern to form was actually quite long. Now, let's take a look. With this head and shoulders pattern, we can still measure its target price. Although this simple method may not be the most accurate, we can still estimate it roughly. It falls around the range of 41,000 to 42,000, with the head and shoulders pattern below. After the market breaks through the neckline, well, as you can see, it has currently completed a retest of the neckline. After completing the head and shoulders pattern, it broke above the neckline, but instead of an immediate upward movement, it first retraced, then retested the neckline, and gained support before continuing upward. During this continued upward movement, breaking the previous high is quite crucial. It is an important indicator of whether the trend can continue. Now, let's see if we expect this current wave to rise to 41,000 to 42,000. In what form will it occur? Now, at this point, let's take a look. In fact, during the small bull market, we can definitely consider it as a retracement of the previous significant downtrend. Previously, we experienced a drastic bearish decline, which was extremely exaggerated. From around 69,000, it dropped all the way down to approximately 15,500. Regarding this decline, it will generate a corresponding level of rebound. However, this level is too large, and not something that can be easily handled on daily or weekly charts. It's too significant. After this downward movement, there will be a rebound, which is the current market trend we are experiencing. Previously, we reached the 236 level, and I believe that ultimately, it's highly likely to halt at a Fibonacci level. So, if we take the range of 41,000 to 42,000 as the boundary, it will most likely fall around the Fibonacci 0.5 level. We can measure it briefly. If we move the target price of the downside head and shoulders pattern to the neckline area, we can clearly see that it's approximately at the 0.5 level. I would believe that the highest point absolutely cannot exceed the 618 level. Of course, to exceed the 618 level, which is approximately $48,000, we would need to wait until April of next year, when the halving cycle bull market begins. Only then do we have a chance to surpass this level. Now, let's see. In fact, the 0.618 level serves as a barrier. If the price exceeds 618, then we cannot consider the current upward movement as a rebound from the previous decline. It would be a new trend. So, I believe that the small bull run, no matter what, cannot surpass 48,000. Also, at the 48,000 level, there is a clever technical explanation. What's it? This level is approximately around 48,000. We can divide the entire previous bull market into two segments. The first segment is the downward movement, followed by a rebound, and then the second downward movement. I think, looking at it this way, it represents the true nature of the bear market after being dissected. Therefore, the price hasn't surpassed the retracement here, which actually seems quite reasonable upon closer examination. So in what form will it occur? In our previous video, we discussed that the pullback we're experiencing is not targeting the retracement since 19,500, but rather the retracement since the rise from 15,500. It follows a pattern like this. At first, the pattern started like this. It's this kind of upward movement It's followed by a significant pullback. After the completion of the pullback, I believe that we will experience another upward movement characterized by a very similar three-wave structure. Much like the previous upward trend we observed, we believe that we will continue the upward movement in this manner. However, as you can see, breaking through the resistance around 30,000 will require a substantial trading volume. Otherwise, it's not easy to break through it. The resistance at this level is quite strong. If this scenario plays out, we can formulate our trading plan accordingly. For example, for spot positions, if we want to capture the later part of the upward trend, if this scenario plays out, it is not too late to enter at this point, even though we may not have bought at the absolute bottom. Of course, for entering positions, especially larger positions, it is advisable to do so gradually. Now, if we consider trading contracts, setting stop-loss levels is more challenging. I mean, if we are only considering entering now, well, it would be relatively safer to enter at a slightly lower position, such as around 28,500. Let's zoom in on smaller time frames to look for better entry opportunities, a better timing to enter the market. Currently, we have reached a resistance level around the previous high, where we previously experienced decreased trading volume. Also, such a combination of candlesticks has formed. An inside bar pattern suggests that we have encountered some resistance at this point and need a temporary pause. The bearish candlestick in question has a volume that is approximately half, or slightly more than half, of the previous candlestick. At this point, it is evident that there is resistance. So, I believe that a period of consolidation is necessary. It is merely a moment of pause as we haven't experienced a significant decline, and the trading volume hasn't shown excessive behavior either. So, in my opinion, it is not practical to consider a complete reversal of the bullish trend at this point. Let's zoom in further and analyze at a smaller time frame. Once we switch to a smaller time frame, we'll notice that the smaller the time frame, when we observe the candlestick patterns and volume, it becomes evident that the current consolidation is leaning toward an oscillating trend. It is merely a period of pause, correction, and oscillation following the previous bullish movement. Considering that it is now Friday and the weekend is approaching, we will only have an opportunity by next Monday. By the time we reach next week, this period of correction will have almost concluded. Especially if it is a relatively short consolidation, it will be nearing its completion. Comparing the current volume with the previous bullish rally, it is clear that the current volume is much lower. Alright. In the present situation, making a short call would not be advisable. At the moment, based on the candlestick patterns and the breakthrough, the bullish trend has a clear advantage. Instead, we should note that breaking the previous high requires overcoming the resistance around 31,000. Additionally, if we observe the weekly chart, if we want to continue the pattern we just discussed, which involves another three-wave upward movement, this one, an upward trend consisting of three distinct waves. Therefore, it is crucial to surpass the strong resistance at approximately 30,000. Once this level is breached, I reckon there is still considerable potential for further upward movement. Alright, let's move on. I have been actively developing our quantitative trading system, making numerous updates, and introducing several strategies. Recently, these strategies have performed well, capturing the bullish movements. On the 20th, 21st, and 22nd, all the strategies have been focused on long positions, as you can see. As you can see, there have been multiple strategies recently. If you are not familiar with manual trading, I recommend trying out these strategies, as we have launched a wide range of strategies and made significant improvements to the systems. Alright, thank you. You're welcome to like and share my videos and subscribe to my channel to show me your greatest support. By the way, if anyone wishes to join our line group, because most of my channel's audience is from Taiwan, if anyone would like to join the line group for communication and discussion, we have created a public line group for it. There are no specific requirements for joining. As long as you are interested in cryptocurrency, you are welcome to join freely. We will also share additional resources and information within the group. Thank you so much. Bye-bye.